Good morning. On behalf of EAC International, I welcome all of you to this webinar. E-Africa Research Center, EAC International, is an organization registered both in Ghana and land.
Hello? Hello?
Hello?
Hello?
EAC, E-Africa International Sector is an organization registered both in Ghana and Lechman in the European Union. We believe with research, education, training, and development through entrepreneurship, skill development, practical-based education, training of individuals, communities, small, medium, and large organizations, we will be able to alleviate poverty in Africa. In terms of education, currently EAC International is working very hard to get accreditation from Ghana and United States of America to run our online programs in BSc programs, master's program, doctorate program. As soon as the programs are ready, you will hear from us as well. Then we have some services that we give. Under our services, we have research. We research into poverty alleviation, agriculture sector research, educational sector research, sanitation and waste management research, that's environmental research, pre and post project research, feasibility study, finance or banking sector research. We have business organization research, research into economic and development, research into climate change mitigation, social science research, and general consultancy. Then we also have some service, we also have some trainings. Under our trainings, we have short-term courses, webinars, academic training, both online and physical. We have organizational training, both online and physical. We have workshop for schools. We have workshop for organization, panelists for academic webinar, panelists for organizational webinar, panelists for academic and conferences. We also have panelists for organizational conferences. You can also invite us to speak or panel your seminar or ceremony. Ladies and gentlemen, I want to use this opportunity to welcome our speaker, Professor Emmanuel Tete. He's a PhD holder. Professor Emmanuel Tete is a finance analyst or specialist, economist, accountant, researcher, lecturer, and author. His work involves analyzing corporate organization, microeconomic, international finance affairs, consultancy, and research. The passion and interest, motivation in the field of research and consultancy grow after many years trying to find solutions to the many economic and organizational problems. He is the country director of E-Africa Research Center. Professor Emmanuel Tete is the one who is going to take us through this journey of this webinar as well. And he will respond to all your questions. Please note the presentation will take 1 hour. Then we have 30 minutes for questions. Also, please, this is very important information that I want all of you to note that this webinar is free, but to assist EAC International to organize more of this webinar, if you want a certificate and slides, you will have to pay $10 or 150 Ghana cedis by our Ghanaian counterpart to be able to get a certificate and a slide. However, please, Prof. Imanotete, you can please take over. My name is Moses Jean Woyoma, your moderator. Thank you.
Thank you. Moses. Okay. Good morning once again.
Good morning.
Yeah.
Prof.
Okay. We are expecting 65 participants, but I don't know. We have only 5, but we can't wait. So we have to start. So I'm presenting on corporate governance. Please, I'm trying to share the slides. Okay, so I'm presenting on corporate governance. Corporate governance refers to the way in which companies are governed and to what purpose. It identifies who has the power, accountability, and who makes decision. Now, when we say corporate governance, is referred to the way in which companies are when we say corporate governance, is referred to the way in which companies are governed and to what purpose. We know, like human being, everybody is having objective to meet. Companies as an entity have their objective to meet. And this objective is whatever is important to govern. The objective of the company, their vision and missions which they are aspiring to achieve. These are the purposes of the company. You see, like human being, everybody wants to be seen to be doing well. Organization also want to be seen to be achieving their aim, to be serving the purposes in which they exist. And that is what corporate governance seeks to govern, what the organization exists to achieve, the aim and objective of the organization. That is what corporate governance governs. One, it also identifies who has the power and the accountability, and who make decisions. Remember, the power, the authority of the organization is very, very important. The accountability of the organization is very, very important. Who make the decision? This form relationship between the board, the management, and employees. The board, the management, and employees. there should be a very cordial relationship between these bodies of the organization. There should be a very strong cordial relationship for organizations to survive, for the organization to grow, for the organization to do well. There must be cordial relationship between who has the power, who takes the accountability, or who is responsible for the accountability, and who makes the decision. It is in essence a toolkit that enables management and board to deal more effectively with challenges of running the company. Corporate governance is a toolkit which enables management and board to deal more effectively with challenges of running the organization. Board have to take the tactical decisions. Management have to accept the tactical decision being taken by the board and digest it to employees so that the employees, or at the functional level, they implement whatever decisions being taken from the board of directors. To deal more effectively with the challenge, and when this is done, that is when the organization will be seen as dealing more effectively with any challenges or running the organization more effectively. Now, let's look at this chart. In the broader perspective, corporate governance determines how stakeholders influence the company. How stakeholders influence the company. So we have the company that exists. We have the shareholders who influence the company with their money. They have put their investment into the company. We have the board which take tactical decisions of the company. We have board of directors who take the tactical decisions, the strategic decisions for the company. We have management which accept these strategic decisions taken by the board of directors and digest it to employees. We have the functional level. Employees can be classified as the functional level, which implement all these decisions. We have the society, which also patronize whatever produce or product that the organization comes out with. Then we have the environment where the organization finds itself. All these factors influence the organization in one way or the other. The organization as a corporate individual is influenced by its stakeholders. And when all these investors are doing their work, board is doing its work, management is doing their work, and employees are doing their work, society is also patronizing the organization, then we'll see that corporate governance is seen to be in place. When they are all working effectively, it's then that we see corporate governance taking place or seen in place or working effectively. Now, we also have stakeholders of the organization. And these stakeholders are bodies or parties which have interest in the company. So from the structure, we see employees. Sorry, I'm going back. We see owners of the company. They are stakeholders of the company. We see employees, they are stakeholders of the company. We see managers, they are stakeholders of the company. We see society, they are stakeholders of the company. We see creditors, they are stakeholders of the company. We see employees, they are stakeholders of the company. We see government, they are also stakeholders. And all these parties, they have interest in the company. And they also want to assure that the company is effective, is operating efficient and effectively. Owners put their money into the company. Once again, employees ensures that the company survived, and they are interested in the company's survival and the profitability of the company, so they can get their salaries. Management are interested in the profitability and the interest of the shareholders, because management ensure that the company grow, they have money, and the interest of the shareholders as well. We have customers, their interest is the company exists so that they can get whatever they get and transact with the company each day. Then we have government. Government also tax the company, so he's also an interest party to the company, and he's a stakeholder because of their corporate tax. Government take corporate tax for organizations to run the company. Then we have suppliers. They also supply raw materials to the company, so they have interest in the company. Then we have creditors. Creditors also supply goods on credit to the company, so they have interest on the company. All these parties want to see the company growing and the survival of the company. But without good corporate governance, the company is difficult to survive. The company is difficult to survive. Now, let's look at what I term structure of the company. Every company has its own structure. Every organization has its own structure. One, corporate governance is also defined as a structure, a process by which companies are directed and controlled. Corporate governance is also defined as a structure. Vividly, it's a structure, because we have the stakeholders, shareholders, we have the annually, the shareholders meet at least once a year. They can organize, they can revisit some emergency meetings when the needs arise, but mostly they attend annual general meeting. And it is at the annual general meeting that a lot of decisions are taken. It is at the annual general meeting that a lot of decisions are taken. One, at the annual general meeting, it is where they nominate the external auditor for the organization at the annual general meeting. Then at the annual general meeting, that is when they nominate the nomination, or they elect the nomination committee of the company. Now, what is the nomination committee of the company? Nomination committee of the company see to the corporate governance policy of the company. No, corporate governance, know that it's a rule, it's a regulation, it's a procedure, and it's a law. Every company has policies. Those drafted policies of the company, rules and bylaws of the companies, are what the company needs to ensure, and are what will make the company a desirable company for the society and for the country. And these rules are what corporate governance ensure. Your own bylaws, your own rules and regulations are what the organization need to ensure that they are working. And when these rules are working, the company is governing well. And that is what we term as corporate governance. It is your own rule. It's no rule from anywhere. Your policies, your bylaws, your procedures. Now, in Ghana, we have every company they have fantastic bylaws, they have fantastic rules and regulations, but it's not being applied. That is our problem. All these rules are lying, regulations and policies are lying down on the desks, are lying down on the shelves, and we are not making use of them. So at the annual general meeting, nomination committee are formed to ensure that corporate governance is working well. The nomination committee ensures that corporate governance is working well. So the petty internal controls that we have in the organization, internal controls, basically internal audit controls. Let me say that. And we are saying that corporate governance will not be complete until internal audit is affirmed. We are saying that corporate governance is not complete until internal audit is affirmed. So internal audit is very, very important in the life of every organization. What do they do? The internal audit ensures that corporate governance or the internal controls that we have, be it HR policies, be it finance policy of the organization, be it managerial, those that we have in the administrative manual and those that we have in the finance manual, all the policies that seems to help the organizations to work well. That is why internal audit exists. Internal audit exists to ensure that those policies are working well. They exist to ensure that those policies are working well. So at the annual general meeting, the shareholders nominate board of directors. Now, this board of directors ensure that they nominate audit committee. They ensure that they nominate audit committee. What is the work of this audit committee? This audit committee are nominated from professionals, especially finance professionals, who understand whatever issue the finance people or the internal audit will come out with. And this audit committee ensures that finance, whatever report presented by the internal audit are implemented. That is the work of the audit. We also call it audit committee, the board subcommittee. The audit committee, we call it board subcommittee. Then board also nominates the remuneration committee. Of course, remuneration committee ensures that the remuneration of executive are well fixed. The executive, top management, senior managers, and blah, 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 blah. Their work, remuneration committee ensures that the remuneration of the executive committee are well fixed. The board also ensures the appointment of the CEO and management. They also assure the CEO and management. These are the corporate governance, and these are the bodies that work hard to ensure that corporate governance of the organization is working well. Corporate governance of the organization is working well. Okay. Now, I'm now moving to the significance of corporate governance. The significance of corporate governance. When corporate governance is working well for the organization, it boasts so many things. When corporate governance is working well for the organization, it improves so many things. One, it creates smoother operation of the organization. When controls, rules, regulations are working well. When board and management ensures that controls of the organization, the relationship that exists between the structure of the organization, who take this decision, who controls this, who directs this, when everything is working well, it creates smooth operation of the business. So corporate governance is very, 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 very important. Corporate governance is very, 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 very important because it creates smooth operation. So when you see any company that is having it difficult to operate, it means corporate governance is not working well. And this is what we have to stand up to as the young entrepreneurs and young management that are rising up. We have to stand up to this. You see, we have to stand up to this because our organization needs to operate smoothly. They need to operate smoothly. See, without any problem, especially country Ghana, corporate governance is not working well from regulatory bodies which need to control and up to management board. We cease not to get it. We cease not to get it. And this country is having fantastic code of corporate governance. This country is having a lot of fantastic companies. I came across the corporate governance code of civil servants. Hello? Hello? Please, kindly mute this thing for us, please. Mr. Kofi, kindly mute this thing for us, please. Mr. Kofi, kindly mute this thing for us. Mr. Kofi has just joined. Yeah. And so, what corporate governance does, one of the significance, it creates smooth operation of the business. A typical example will be the banking cleanups. Typical example, all right. Are the banks operating efficiently? Are they making profit? If you analyze, it looks like the regulator doesn't have it right, and management and board also doesn't have it right. You see, and it has created a lot of problem. Now, corporate governance build a positive brand reputation. Corporate governance build a positive organizations that corporate governance works, it seems to be working well. It builds a positive brand reputation. And ask me, what is a positive brand reputation? Because of everything seems to be working well, the company, because everything it seems to be working well, the company, it seems, as being operating well. It's seen as a good company. And that is a positive brand. The goodwill that the company show to the to the outside body is well accepted to all, and that is what is seen as a positive brand reputation. Positive.
If possible, Hi.
Now,
How are you?
another significance,
Please, how are you?
when organizations,
You are here for the 414 program, right? So where are they doing the registration?
when organizations are seen as corporate governance organization, it improves cost efficiency, or where corporate governance is being practiced well in the organization, it improves cost efficiency. And ask me how controls are working. Internal audit controls are working well. Now, policies, procurement policies are working well. And when internal audits controls are working well, internal controls are being ensured. Internal controls are being assessed well. It reduces costs. Procurement laws are being applied well. No decision is taken without going through all the procurement procedures. It reduces costs. So when corporate governance is working well, remember that when those policies, rules, and regulations are being in place and are working well, that is what we term as corporate governance, or that is what is seen as the organization is seen as being practicing corporate governance when these things are working well. And that is what improves cost efficiency, because you cannot purchase anything without going through the procurement procedures. You cannot purchase or do anything that doesn't have money value for the organization. Internal audits will ensure value for money. Whatever decision, whatever move, they will ensure value for money. Now, when these things are practiced, it attracts investors into the company. Anybody wish to deal with the company, be part of the organization. You see, people are interested to be part of the organization when policies, procedures, structures, regulations are working well. Everybody wants to be part of the organization. Everybody wants to be part of the organization. So the organization is seen as a corporate governance organization, and it makes the company attractive to the outside world, and it attracts more investors. The company attracts more investors. When the company is listed, you see people rushing, especially when it's listed on the stock exchange. You see a lot of people rushing to purchase the share of the company because things are moving well. It means they practice good corporate governance. See, corporate governance also ensures objectives of the organizations are reached. Corporate governance is a purpose-driven and include aligning procedures, policies, and practice around the company objective. You see, corporate governance is driven, and so it ensures that procedures are aligned, processes are aligned, practices are aligned well, so the organization achieve its objective. So the organization achieve its organization. So corporate governance is very, 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 very important in the life of every organization. Corporate governance is. Now, let's look at principles of good corporate governance. we have looked at the significance. Let's look at principles of good corporate governance. 1, accountability. Good governance relies on accountability, which is referred to clearly defined roles and responsibility. You know, you have to be responsible for whatever you have to be responsible and answerable to your position. When you are given a position, you are appointed a director. When you are a manager, you see, people want to see you as a responsible person.
Prof, please, I think someone's mic has unmuted, and I think is distracting the class. I don't know.
Hello, please. I want to pray that everybody should unmute itself or himself. You should mute, yeah, because somebody is distracting the class. Hello.
I think it's one Kofi Israel, so I don't know.
Yeah, I don't know whether he's even in the class. I don't know.
Yes, please. Yes, please. I'm in the class.
Yeah,
I'm on it.
Please unmute yourself, please. Unmute yourself, please, for us.
All right. Thank you, sir.
We are receiving lots of distraction from you.
Thank you, sir.
Okay. So principles of good corporate governance. Very, very, very important. We need to be responsible for our positions. What position are you holding? Are you responsible and answer? People want to hold positions, but they don't want to be responsible and answerable to the position. And it's creating a lot of problems. A lot of people who hold positions and they are not accountable. And if we, the citizenry, also doesn't know how to hold them account. But quite recently, oh, Mr. Kofi still, okay, now he has unmuted. Quite recently, what happened in Kenya, even though they've not taken the good course for their these things, it has sounded a warning to everybody in position that we need to be very careful the way we handle our positions, because we need to be responsible and answerable to the people who have given us those positions. You see, we need to be responsible. When you are a board member and you are appointed a board member of organization, you don't go to the board meeting without preparation. Board meeting is not a church meeting, because everybody on the board, when the board meets, want to be seen as contributing well. When you see the diagram there, you see accountable. You need to be accountable to your position. You need to be accountable to your shareholders. You need to be accountable to the employees of the government, all the stakeholders. We need to be accountable to when it's an organization, when it's a government. Then we need to be answerable to people who put us in those positions. We need to be accountable to them. And that is why Ghana, we are suffering. We don't hold those in positions accountable. And that is why they can come and do anything and go back, and next time come and demand for their re-election into those positions. But if we are serious and we are holding them into accountable into those positions, they will be careful in decisions that they take against us. Likewise, in companies that we manage or we are board on, we have to be accountable. As I was saying, sorry, you cannot go to a board meeting without preparation, because any issue that will be put on table, the board, all the boards must be seen to be contributing effectively to whatever issue that might be brought before the table, because you are a board. So you don't go to board without preparation. When you go to board, you can't go to board meeting and keep quiet like be in parliament. You are appointed to the board because of your expertise. You are appointed to the board because they know you can contribute to certain issues that will bring promotion to the organization. All those things are accountable because you need to be responsible to the board. You see, every board member must seem to be working, to be participatory. If you look at it, when you go to board meeting, you need to be participatory. You need to be part of the board. You need to contribute to board issues. You don't go to board meeting and keep quiet like in parliament. Now, you have to be seen when you are in managerial position, you are in board position, to be transparent. And what do I mean by transparency? Every board member, every management committee member, every even employee, you have to be transparent. Your contribution to the organization should be something that should be understood by the people. It should be understood by the people. You don't take decisions that will confuse the people. You don't take decisions that will be in your own interest. No. Now, if you look at good corporate governance diagram that have consensus orientation, when you are a board member and something is put on the table and you are discussing, now, issue and consensus is being taken. You shouldn't, because the thing is not going in your interest, you will not support. Once a decision is taken and it's something that will benefit the organization, you need to support it. It shouldn't be something in your interest before you support. Once a consensus is taken and it will be in the best interest of the organization, you need to support it. And that is consensus orientation in good corporate governance. As a board member, as a manager, once the thing is in the best interest of the organization and it will benefit the organization, you need to support it. Follow rules and regulations, rules of laws of the organization. If you're a board member, you are a manager, follow rules and make sure you implement them to the latter. Those are the procedures of good corporate governance that will bring the well-being of the organization. Those are the things that will be in the well-being of the organization. There's responsiveness. Yes, I said it already. Then inclusive. When decision is being taken, there should be equitable inclusion. The decision should be taken to benefit all. It shouldn't be in the interest of only few groups. No, in board meeting, we don't do that. Decisions that will be taken should be inclusive. There should be inclusiveness. Should be something that will benefit the entire organization, will benefit everybody. Everybody should be part of it. When decisions are being taken, there should be inclusive. It could be by bottom up or is it bottom down? Yes. Sometimes you assess whichever that will benefit the organization, and we bring everybody on board. That will bring everybody on board. These things should be assessed well. These things should assess well. And when there's accountability in place, there is transparency, there is responsiveness. It brings efficiency. Now, one example about the transparency is reporting entity, especially when we are reporting financial, especially producing financial report of the organization. The financial report should be seen to produce the achievement of the organization only, and nothing should be added. The financial report should be seen as producing the achievement of the organization, and nothing should be added. The report should not be presented in a way as looking good, but on the ground, it wasn't so. No, the financial report should reveal whatever the organization seems to achieve. Whatever the organization achieved. It should be its achievement, and there should not be any window dressing. When I said window dressing, what I mean is something should be added to let the report look good. That is window dressing. That should not be part of the financial report. That should not be part of the financial report. And every reporting entity of the organization should review or should show what the organization has achieved. It should show what the organization has achieved. In our reporting too, among the principles, there should be transparency, there should be fairness. There should be transparency, there should be fairness. Fair presentation, fair dealings. Every member of the organization should be seen as dealing fairly, should be exiting good culture of the organization. They should deal fairly without any conflict of interest. Board member should be dealing fairly with the organization without any conflict of interest. Management should be dealing fairly. All that you are doing should be something that will benefit the organization, but not your personal gains. All that you are doing should be something that will gain the organization. Should be a contribution that will benefit the organization. You should be dealing fairly. And that brings good governance. That brings good governance. That brings good governance. Now, responsibility, fiduciary responsibility. Board members should be seen as exhibiting their fiduciary responsibility, acting well on behalf of the organization. There should be utmost good faith in their dealings. Utmost good faith in their dealings. Every board member, every management member should exhibit utmost good faith, should be dealing with the organization in their best interest, producing, showing their best to the organization. That is utmost good faith. And they should be seen as exhibiting duty of care for the organization. 2, first, board members and management members should show utmost good faith to the organization. Utmost good faith, giving their best to the organization. That is utmost good faith. And duty of care. Duty of care to the organization. Duty of care to the organization. All board members Sorry, somebody is entering. So, yeah, duty of care. Now, management and board members should seem to be loyal to the organization. If you are a management member and you are not loyal to the organization, then you are not showing fiduciary responsibility, or you are not fiduciary responsible to the organization. You should show a duty of care. The organization should be part of you. You should be part of the organization. You should feel for the organization. When things are going wrong, you should feel for the organization. You should be loyal, committed to the organization, the well-being of the organization. And that is what we are seeing this day that is not working. There is no utmost good faith in place. Board members and management are not showing utmost good faith. They are not showing duty of care to the organization. They are not committed to the organization. And things are not working well for us, especially in this country. Then social, as a board member, as a management member, you should be corporate, you should be responsible for corporate social responsibility. Beside the organization, beside people in the organization, what are you doing to help to assist the outside world, the society, the environment where the organization operate, where the organization finds itself? If it's an outside organization, the country in which the organization operates, as management board members, what are you doing? We should have the mind of corporate social responsibility as well. As a board member, as a management member, we should have the mind of corporate social responsibility. We need to be responsible to the community. We should be responsible to the environment. Then we should be responsible for even the workplace. Then we should be responsible for the marketplace where we send our products. Wherever we send our products or our produce, we should be responsible. So management and board members should have the mind of corporate social responsibility. They should have the mind of corporate social responsibility. Then in conclusion, I want us to study the key pillars of a successful corporate governance. Then I'll end my lectures. The next, every month we want to organize one webinar. So the next meeting, we shall talk about importance of corporate governance. The next meeting, September by this time, we'll talk about, so we are praying that when you see our DC, join us and let's discuss. The pillars of successful corporate governance are: one, accountability. I've explained it. Without the accountability, no organization can succeed. Accountability is very, very important. Fair dealings, fairness is also a pillar of a successful corporate governance. Transparency is also a pillar of a successful corporate governance. Then assurance is also a pillar of successful corporate governance. Assurance is also a pillar. How do we assure the organization we are managing, the organization that you are board member? How does it assure the general public of your dealings, of your products, of your information? Your information should assure the general public. Especially, let me use financial statement. Financial statement is something that a lot of people take decisions on. Is your financial statement assuring the general public the information in the financial statement? Is it giving the assurance of the general, especially investors, or an investor who read about your financial statement and you want to take decisions about your organization. Is your financial statement assuring them that there is free and fair information in the financial statement? And therefore, whatever profit that is seen there is a fair profit they can take decision about. Our annual reports that we put out, that it give assurance to the general public that they can use it and take decision on it without any failure. This is what organizations should begin to be looking at. That every information we put out there should give assurance to the general public. Very, very important. And it's a very good pillar of corporate governance. How organizations can assure the general public about information they put out there. And the general public can rely on it and take decisions without failure. Without failure. Then leadership. What leadership do we exhibit as board members, as managers? It's also a very good pillar. How do people see your leadership? How do people comment about your leadership? Very, very important. Do they see you as a good leader and that you are leading the company well without any hypocrisy? How do we manage stakeholders, people we deal with? It's also an assurance of good corporate governance. How we manage people that we deal with, people we transact with, people we work with. How do you manage them? Do they leave your organization certifying, well certifying about transacting with you? How do you manage them? All these are pillars of a successful corporate governance. And when we exhibit them well, it will bring success to our companies. So thank you. Thank you very much for coming. I will expect your questions and respond to it. Moses. Hello, 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 Moses. Hello. Hello, Moses. Hello, Moses. Hello, Moses. So, hello, Moses.
Yeah, it seems. Hello, it seems he said he's having problem responding. So,
So you can ask your questions now, since I can hear you direct. We want to take feedback, questions. Hello?
Yeah, hello. Yeah, sorry. For me, I don't have any question now.
You don't have any question now?
Yeah.
So who else has a question on the presentation so far? Who has a question? Okay. So as Moses said, African Research is an organization that we want to use training, practical training. You will be seeing some of our practical training on the tell you we want to do practical entrepreneurship training, we want to do webinars. So this corporate governance, we are treating 7 series of it. 7 series of it. We are treating 7 series. Next month, Batista, we are going to treat the importance of corporate governance. So we are welcoming all of you to come along with us, and let's discuss together in a little way that will help to improve our organizations and the managerial positions that we are holding. There will be a lot. 15th, there will be a seminar. Hello?
Sorry, my laptop.
I'm listening.
I was trying to rejoin.
Yeah. So check.
Thank you very much for your presentation. However, if any participant here has a question, you can leave your question in the comment section, or you can ask the question. Then I'll push it to Prof for him to answer you. Thank you very much.
Yeah, so we want to work with you. It's rather unfortunate today. I have 65 people registering, but I don't know what happens. Only 9 was able to join. I was very, very surprised. 65 people registered. They registered, and 9 people joined the conference. But that will not be a problem. So we have certificate. We award certificate for participation. If you are interested in our certificate, you can just give us 150. We will send the certificate. We have a Momo number here. If you want to take the certificate, we can. This is our Momo number, 045-870-4480. If you are interested in certificate and the slides, and you pay 150 into the Momo number, we give you some. If you are not interested, it's cool. And this is our WhatsApp. This is our WhatsApp number as well. This is our WhatsApp, telephone, website. You can go to our website and read whatever information you need to read. You can read. And if you want to take a certificate for participation, in fact, 15th, we are organizing another webinar on leadership and change management, 15th September. And 29th September, there will be corporate governance, importance of corporate governance. So you can flow with us. You can flow with us. You can move with us. So if you are interested in certificate, we give certificate and the slides. You give us 150, we send you the certificate. Please, when you are sending, reference your name so that we can identify your name from the registration fee, registration on the registration list. And we can send you your certificate, and the webinar and everything is free. But if you want to take certificate and slides, you give us 150 and we can send you certificate and your slides to you. 15th, there will be another seminar on the leadership and change management. We are inviting all of you. 15th, another seminar. Yeah, but if you don't...
Please, is it 15th September?
Yeah, 15th September.
Okay, so how do we get updates so that we can... is there any particular...
Now that I have your mails, those that I have your mails, I will send whatever program straight to your mail, straight to you.
Okay.
Now all that right. I have, we can we send it straight to you. So now, for you people, you are part of my customers now. Our customers.
Okay.
Now.
So the amount is it in cedis or dollars?
Oh, please, you can pay in cedis. That is how it's $10. Cedis is 150, and we can send you the slides and the certificate.
Okay. All right.
Yeah, but if you don't want certificate, we are free with you. You can still join us and listen to us.
All right. Well noted. So, anyway, thank you very much for the lectures. Very insightful and helpful.
Thank you very much. Thank you very much.
Thank you.
So you are all welcome. Let's come together, and there will be series of where we are corporate governance. I'm going to treat 7 series of it. This is the very first one.
Okay.
So you are all welcome. You are all welcome.
Thank you, sir.
Thank you very much. Thank you very much.
Thank you.
Thank you.
Unfortunately, my network had been very bad, so I couldn't hear most of this thing.
And we are sending the information to our YouTube site, so you can download the software from the YouTube site.
Okay.
We have when you go to our website, we have YouTube, and we shall put the information also there, so you can download the soft. And if you want to have the hard to, when you pay the listing, we can send it to you.
Okay.
Okay. Thank you very much. Okay.
All right. Thank
Bye.
you too.
Bye.
So beautiful.
Bye.
All right, okay. On behalf of the ARC International, I want to say thank you all for joining, and we will see you again on the 15th of September in terms of leadership training. And we are glad to have you all on board as well. If you want certificate, as Prof says, you just contact us, then we will get a certificate sent to you as soon as possible. We look forward working together so that we can achieve a great organization and impact our community as well. Thank you very much. Have a wonderful afternoon. Thank you.
Moses.
Hello, bro.
Okay.